Hello there, Maverick Traders. This is Imri, and welcome to today's Market Roundup. Okay, lots of cool stuff to talk about, so let's get right into it. So first off, in terms of the broader market, the S&P had a healthy day today, up almost 1%. The total world stock index up over just 1%. Crypto, it's a mixed bag there. So Bitcoin underperformed on a relative basis and Ethereum outperformed. So although the basket is roughly flat on the day, a lot of the larger market cap cryptos did have a reasonable showing, especially Ethereum. Gold up over 1% and oil down over 3.5%. Broadly speaking, equity markets maintain their bid and the US dollar loses its bid and pulls back a little bit. Now looking at the S&P, I alerted you guys to this downwards channel in the S&P, and we've broken out of it now. That's pretty exciting, but man, how far is this rally going to go? That's the question. Is this the start of a longer-term bottom? Technically, in my opinion, from a technical standpoint, the market's met a lot of conditions on a technical basis to validate that assessment that the market has put in a bottom. From a sentiment perspective, however, I don't know. Anecdotally, everyone I'm talking to that's not really a trader, just kind of managing their own money and interested in stocks or Bitcoin every now and then, they're all asking about buying the dip. That kind of sentiment is not really broadly representative of what I would look for in a market bottom. So it makes me wonder if the other shoe is yet to drop. But moving from my anecdotes aside and sticking to what's on the price chart here, I think a key level is 41.77 in the S&P. All right, I'm not saying we're on our way to test that. That's quite a big move from where we are right now. But if we take that out, then I would say the bullish case will start to become a little more undeniable. Until then, I would not be surprised if we had a down day in the S&P to end the week tomorrow. Or at least flat. I'd be pleasantly surprised to see another strong showing like today to close out the week, but hey, anything's possible. In the total world stock index, you can see we've broken above this long-standing support resistance zone, and we're peeking our head above the 50-period moving average right now. We need to stay above these averages in order for them to eventually cross to the upside, which would be a huge sign in favor of global equity markets that we have a sustained rally underway here. And in cryptos, I highlighted this sideways price action here as a potential low base. It's not a base anymore. It could potentially be a bear market rally. Definitely too early to say that a real and sustainable recovery is on the cards. Same thing with equities. Everyone I'm talking to that's ever traded crypto before is asking me if it's time to buy these lows, which again is not typically representative of the broader market psychology I would expect to see in a real bear market bottom. So in terms of the market outlook, I gotta give this a plus too. We're above the 20 and 50 period moving averages, but they have not quite sloped up yet. On the news front, whoa, so were people surprised by the ECB's first rate hike in over a decade? Well, I was talking to a trader about that earlier today, and I said, no, I'm not surprised. And yeah, I think the market, if you look at European bond yields, the market started to price in that rate hike anyway. The euro did surge a little bit at first and then gave up those gains very quickly. So I think that's the market saying, hey, ECB, all right, you're raising rates. Welcome to the club. Welcome to the club with most of the other central banks, except for the Bank of Japan, which I'll talk about next. But I think the market's going to want to see a little bit more from the ECB before they start respecting the euro once more. On the Bank of Japan front, it's kind of the opposite. The Bank of Japan said they're happy to maintain loose monetary policy for the foreseeable future, but the yen strengthened. How does that make any sense? Well, that's basically the market calling the BOJ's bluff and saying, look, we don't buy what you're selling. We think you're going to have to tighten up policy like pretty much every other major central bank out there. So we'll see. My personal hunch, you know, if we're engaging in some cocktail market talk here, my personal hunch is that the Bank of Japan will be forced to tighten up, and we'll see what that means for the Japanese economy in the intermediate to long term. Okay, so moving on to currency analysis now. Starting off with the cryptos as always. So you can see here, right, Bitcoin Cash. I mean, Bitcoin Cash was up over 1%, but relative to ETH and Solana, you know, I mean, they kind of underperformed. And then Litecoin and Cardano more than held their own. On the fiat side, like I said, you know, I think a lot of people were surprised to see the yen strengthen. The dollar, like I said, lost its bid. Pound and the CAD were weak, so we're seeing some divergence there between the commodity currencies. And alongside the yen, the Aussie was the outperformer on the day. So it's a very interesting mixed bag here. And I've been saying this for some time now. I don't think it's possible to rely on the age-old correlations that we're used to relying upon when it comes to the currency market. All right, so just my opinion, the days of the CAD being an oil currency, kind of long gone. The reality is that sometimes oil will rally and the Canadian dollar will pull back, and other times oil will pull back and so will the Canadian dollar. I don't see that correlation being as close as it once was, historically speaking. So today is just one of those days where oil happened to sell off, and so did the Canadian dollar. But I don't think there's any real correlation or connection to those two events. In just, again, my personal opinion. That correlations come and go. Right now, I don't see that correlation being the strongest. However, that can always shift and change in the future. So when we have a mixed bag situation here, in terms of not being able to rely on the usual correlations, we have to rely on strength, relative strength and weakness, and velocity more than ever. So in terms of velocity scores, I think, you know, if we're looking at the fiat currency side, the Aussie was a clear outperformer on the day, and I wouldn't be surprised to see that continue tomorrow. The big question mark for me is, can the yen continue to put up a strong showing, and is the divergence between the commodity currencies going to resolve? Now, I just put out a video on the Maverick Currencies YouTube channel earlier today as well, where I talk about Aussie dollar. So we're going to take a look at that currency pair in just a moment. But the dollar, the Canadian dollar and the US dollar being the clear losers today on the velocity side of things. Okay, so we're going to take a look now at some possible currency trades here. I'm just going to hop over to TradingView. So first off, let's look at Aussie dollar. Because I think it's a fascinating price chart. And you'll notice I'm on a daily time frame here. And what I really like about this daily time frame is that we seem to have completed what I would call in Elliott wave terms an ending diagonal. Old school chartists would call this a descending wedge. Whether you're an Elliottian like myself or just an old-fashioned chart patterns guy, you would recognize this pattern as a trend reversal pattern. So I do believe there's a very strong possibility that the Aussie has bottomed, and we are now resuming a larger bullish trend that kicked off in March of 2020. So in March of 2020, we hit a low of about 55 cents in the Aussie, and we went about as high as 80 cents, right? That is a freak of a move in fiat currency, all right? And then we had this prolonged pullback, healthy pullback, by the way, and I think, you know, just looking at this chart, this looks very promising right now for a sustained, gradual march back closer, I would say, to 80. I think the odds of us, let me put it this way, I think the odds of the Aussie trading closer to 80 over the next several months is a lot higher than the Aussie trading closer to 55 cents. So I'll be personally looking to buy the Aussie on dips, on pullbacks, and what I'm waiting for, of course, is for those pullbacks to be orderly and to fit my trading plan. All right, Aussie yen next. Very similar pattern in Aussie yen. Okay, we have, you know, this bullish falling wedge breaking out after a sustained move higher. Okay, so I really like the pattern that we're seeing here as well. Very similar. So I think there's a chance here that the Aussie will outperform the yen in the foreseeable future. I would really look for a test of these prior highs here around 96.83, 96.84 or so. Once we hit that level, let's see what's going to happen. definitely expecting that level to be tough to break, at least on the first try. And then the last currency I want to look at here is Euro Aussie. Been tracking Euro Aussie for quite some time. Had my eye on this support here, and it really looks like we're taking that out. So if we can maintain below this broken support, we're below it right now, trading at 147.47. Then I'd really like to sell rallies to test that's going to test this broken support and hopefully validate it as strong overhead resistance. If that's the case, then I really like Euro Aussie to the downside. We can even see a test of the prior April lows around 143.42, which would be a fantastic trade to catch. So that's what I've got for you guys in terms of potential trades. So in conclusion, the dollar is pulling back. The Aussie and Kiwi look strong. The Kiwi was lagging a little bit today. Let's see if it can do a catch up tomorrow. Risk on appetite is here for now. Is it going to stay? That's the figurative billion-dollar question. Like I said, the signs right now are encouraging, but they just don't support for me from a sentiment perspective what I would really expect to see if a bear market's bottomed. So I'm going to be cautiously optimistic, and I'll be continuously looking over my shoulder to see what's coming after me, so to speak. So on a personal note, I would say on the currency side, keep your trades tight in terms of position sizing. Don't overstate your welcome. I've talked to a lot of traders this week saying they're getting whipsawed. If you're trading, either your stops are too tight or you're shooting for too big a move. You're being a little bit greedy. You're targeting, big moves in the currency pair, and you're trying to get away with a very tight stop. I don't really think that's going to work in this current environment. I think the best thing to do is look for clearly established trends. And the reason, we're seeing some whipsaw right now is because dollar yen might be exhausting itself. The dollar could be pulling back broadly, and that would be a dramatic shift in the regime that we've had over the last several months. All right, so just be careful out there is what I'm saying. If the dollar does reverse, wait for that trend to be established, and then we can look to sell the dollar. Now, I do have a personal bias there. I've been calling for a dollar top for quite some time, been wrong on it. But here's the thing, you can be wrong and still make money. So and I say this all the time, don't be married to your bias. At the end of the day, you have to trade the market that's in front of you. So the market that's in front of us right now, just going to hop back to TradingView for a quick second here. The market that's in front of us right now, I'm just going to head to the dollar basket, is that broadly speaking, the dollar's been in an uptrend. And this week, it's been suffering a little bit. It's been pulling back. And we can see that we've taken out this trend line on the daily chart. If I pull up some moving averages, you can see that we're breaking below the 20 period. It's very possible we're going to test the 50, which would be a great tradable move in the majors. But then we might find support on the 50 and make a new high, right? So be open-minded to that, but trade the market that's in front of you right now. So if the Aussie can stabilize and hold above these moving averages, that's kind of the trade I'll be looking for, and I'll be looking to buy the Aussie on dips, like I said. So that's everything I've got for you guys. Stay safe out there, and look forward to seeing you next week. Take care, everybody. See you later.